First guest this morning has been relatively bullish on the TSX, but in the spirit of Halloween, he'd like to remind you the economy these days is like a haunted house. Sadiq Adatia is the CIO at BMO Global Asset Management. Happy Halloween to you.
Happy Halloween to you as well.
We're trying to get into the spirit here, but obviously for investors, it's been a bit of a spooky year to say the least, and I think a lot of people are just trying to figure out where we go, starting a new month. I mean, first of all, the fact that we've seen this advance in October, what does it mean to you?
Well, I think it's what we've seen all year.
Yeah.
It's kind of a bear market rally that we've been seeing. I'm actually very surprised how well we've done this month, given the earnings we've seen out of the big heavyweights in the U.S. So to me, I still think
tech companies that have really lousy
Microsoft,
numbers.
Amazon, Google, you would expect the markets to be down quite a bit as a result of those earnings, and we haven't seen that. I think it's because people are expecting the Fed and other central banks to soften up their interest rate stance a little bit. And we saw that with the Bank of Canada. So I think that's what's giving the markets a bit of a lift. But I still think people are forgetting that the earnings are actually starting to weaken up. That's
one of the considerations for where the market goes from here, is if those deteriorate going forward, that's not fully priced into stocks?
Yeah, I'm busy focusing on interest rates and inflation, which they should have been, but they're forgetting about the impacts of that longer term. And so we're going to start to see the consumer weakening. We're going to start to see margins eroding. We're going to see the prices that people were paying for goods because of higher inflation. That means that comes down. It means the revenue people are going to receive, corporations are going to receive, are going to be lower as well because the price point is going to be smaller than it was previously. So overall, we're going to see pressure on earnings. Again, I think this is just the start of that earnings decline.
So I mentioned that new Bloomberg Nanos poll about how Canadians feel about their personal finances. I think that the short version of that is not great right now. That doesn't surprise you.
Yeah, just think about the consumer, right? They've seen their earnings decline as a result of, obviously, the stock market returns. They're seeing pressure on their debt levels because they're quite high. Now rates are going up. Mortgage rates are going up. Housing values are declining. What are they looking at from a positive standpoint? They don't have a lot to think about positively right now. So to me, that's going to erode into their sentiment, which is going to pull back on their spending, just as their savings rates are coming down as well. So it is time to still be a bit cautious. I do think we are getting closer to the end of the cycle, though, which I think is great on the interest rate front. But can't forget that there's still another leg lower potentially on the E of the PE ratio.
And in terms of interest rates themselves, like people have been throwing out the idea of a quote-unquote pivot. Do you think that, we saw what the Bank of Canada did last week, although really they were expected to raise by 50 basis points. We just happened to have an inflation number, which was discouraging, and then the market ultimately had expectations that were a little higher, and the bank went with 50 basis points. But when the Fed meets, for example, this week, do they have to indicate at what point they might consider lowering rates, or does that once again complicate matters for them when they're trying to get people to stop thinking about inflation?
Yeah, I don't think they're going to talk about where they're going to cut rates again. I think what they might talk about is that, after they put this higher rate in place, they might say that we need to start letting it get absorbed into the economy and let that play out a little bit, because they've done a lot in a very short amount of time.
Yeah.
And they haven't given it a chance really for it to pick up. On the other side, they have the benefit that the supply side of the inflation side is actually coming down. So they can be a little bit more patient now if needed, and maybe they'll take a page out of the Bank of Canada's book and slow it down a little bit.
Okay, so when you still have a relatively upbeat view on the TSX in the face of some, worrisome issues that you brought up, what is it that makes you more bullish, let's say, on the TSX?
Well, one, the fact that I think they were going to cut rates, increase rates at a slower pace, and I think that's what we're seeing. I think the energy cycle is still going to be very strong, and that should support the economy. I think employment is still relatively good. Even though we're seeing cracks, you're going to see that across the world, but I still think we're in a really good shape coming through. And so overall, I actually think that Canada is going to hold up better than the U.S., and particularly if we do expect to see a further decline in markets, Canada's actually held up better on those down markets than the U.S. has.
And do you have to, in making your forecast on where the markets go, do you have to have a forecast on things like inflation? In other words, do you think that all this action by central banks, because as we've learned, some of it is basically out of their control, that the inflation story looks much better?
Yeah, it definitely is better. I wouldn't use the word much quite yet, because we have a lot of sticky parts of inflation that actually haven't gone down. So if you think through, rents are still going to be pretty high. We've seen oil prices rebound back this month, and past couple of months, it was actually down. So that's going to push inflation up again. But I do think that generally we are seeing inflation, heading in the right direction. The pace of that is where the debate really is. I think the Fed also is realizing that maybe it's not coming down as fast enough. Bank of Canada might be thinking it's coming down a little faster. So there's where the discrepancy is between the two. But I do think overall, inflation is still going to be a problem, not only in 2022, but into 2023. The question is that if the Fed and central banks get to that 25 basis point level and then maybe take a pause, that's when the market will really be happy and we'll see a lift up in markets at that point.
And the idea of a recession as well. I mean, where do you weigh on that front? Because I guess the market is, you talked about a certain amount of resilience, it sounded like, for the Canadian economy, but there's, a huge number of people that just sort of based on a technical recession think that is a reality for the economy next year. I guess the question is, how much of a contraction we ultimately see? Yeah,
so I think, on the recession side, there's the technical definition and then how you actually feel, if it's a recession. And I think technically we might get there for sure. U.S., you could say we did. But I do think that the debate on whether or not it becomes a hard or a soft landing on the recession side will really depend on employment. If we get a minor bump up in employment numbers, so that way unemployment goes up a little bit more from here, given that we're starting at a really good point, we'll have really a soft landing. But if we start seeing more of what we've been seeing recently with the heavyweights laying off a lot more jobs, then I do think potentially we could have a harder landing. That's not our base case. Our base case really is a soft landing, a short-lived one, and that this is not a bear market. This is a bull market taking a pause, going back to pre-COVID levels, and then continue on with the bull market. And I think that's an important distinction between the end of the bull market cycle. I don't think that's it at all.
Okay, that's encouraging. And one final point, the currency side, this is one of the biggest stories this year, is the strength of the U.S. dollar. We keep talking about how we're basically importing some of that U.S. inflation, which is getting frustrating for Canadians. But you actually see a little upside in the future for the loonie?
I do. I think if you think about the Canadian dollar, it should be much higher given where energy prices are at. But it's been a risk-off mode all year, and that's always been moving towards the U.S. dollar. You saw even this week when Bank of Canada actually said they were going to raise rates less than expected, which normally would mean the Canadian dollar would decline. It didn't. It actually moved up on the positivity of the economy getting a little bit better in people's minds, or the risk sentiment coming off a little bit, and that gave it a bit of an upside. And I think there's still more room on the upside, but we have to go through a little difficult period on the earnings side first.